Hello everyone. Today we're going to give a brief market recap, then talk about the several indicators coming out in the US, the trade data, wholesale inventories, the Markit service sector PMIs, new home sales, and the weekly oil inventory data. Plus, the New Zealand trade figures are coming out overnight. Well, this is Marshall Gittler, head of investment research here at FXPRIMUS, bringing you my North American opening market comment. The dollar's lower across the board at midday in Europe. It's hard to see why, as U.S. interest rates are generally higher. It may be just risk aversion, as stocks are lower across the board too. Most of the Asian stock markets and all the major European stock markets are lower today. There's not much differentiation among the other G10 currencies. As for this afternoon's indicators, the U.S. advanced goods trade balance for September is expected to show a small widening of the U.S. trade deficit. Now, if you look at the graph, you'll see the forecast is almost exactly where the 12-month moving average of the deficit is, so I don't think this would be enough of a diversion from trend to warrant any notable move in the dollar. Wholesale inventories are a more closely watched series. They're expected to be up after 2 consecutive months of declines. But the rebound looks to me to be quite weak. I'd say that such a small rebound would imply only modest growth and therefore probably be negative for the dollar. The Markit U.S. manufacturing PMI yesterday rose 1.7 point. That exceeded expectations for an unchanged figure. Now, today's service sector PMI is forecast to show only a 0.2 point rise. If that's all there is, then it's likely to disappoint those investors who are thinking that there could be another positive surprise and probably be negative for the dollar. Now, new home sales are expected to remain at around last month's levels. That probably wouldn't be much of an impetus to trading either way. So far, much of the September housing data has been positive. The exception is housing starts, which were expected to rise but fell instead. But building permits, existing home sales, and house prices all not only rose, but rose more than expected. Well, the commentary around the new home sales today will also be important. It may be that new home sales are sluggish because there just aren't that many new homes to sell, in which case it could be taken as a positive indicator. The weekly U.S. oil inventories are forecast to rise by 1.25 million barrels, in accordance with the usual seasonal pattern this time of year. The average over the last 5 years for this week has been a 6.2 million barrel, or 1.7% increase in inventories. However, with inventories currently much higher than usual in any case, a smaller increase would be appropriate. That's probably why the 4.75 million barrel increase reported by the API overnight caused oil prices to fall so much. Following that large increase, if the Department of Energy figure comes in as expected today, it would probably cause oil prices to rally. Finally, overnight, New Zealand announces its trade balance. The deficit is forecast to narrow slightly as both exports and imports rise. Although the trade balance is quite volatile, as you can see from the graph, the news should be positive for the New Zealand dollar. This is Marshall Gittler, head of investment research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.